Can't believe it's June already. Thank you guys for being patient. It's been way too long since I've sent you one of my updates. I thought many of you would appreciate what's going to know what's going on out there, as these are definitely different times. I've never seen times quite like these, and I thought you'd appreciate a little bit of insight from myself. So I'm going to talk to you guys a little bit about mortgages and, of course, real estate, the two things that I really specialize in. And I'm going to share with you a bunch of different stats for those of you that like stats, as they're a pretty good indicator as to where things are going. But of course, I always keep in mind every situation needs to have a proper evaluation on. So if you, by all means, if you want me to review any of your properties or your mortgage situation, reach out to me. I'd be more than happy to do so. But in the meantime, let's go ahead and check out some of this information I have to share with you. So dealing with the mortgage side of things, I'm going to share with you my screen off the get-go. And I'm just going to look at one of my current lenders. I don't know if many of you have heard, but the mortgage rates have increased significantly. And this, on the fixed side, has to do with the bond market. The bond market, the values have dropped, which has caused, of course, the yields to increase. As new bonds are being issued, people are expecting higher and higher rates of return. Hence, when you go to borrow money now, you're going to have to borrow it, in this case for mortgages, at a higher premium. So in this case, if you look at my screen right here, we do have one of our lenders, and I'm just going to draw a couple boxes here for you so you can see what I'm talking about. Yeah, so as you can see here, the 5-year, they're charging as much as 5.49, which is pretty hefty now with this particular lender. Now, this lender I don't tend to put a lot of deals through, but again, every situation is unique, and sometimes certain lenders will not want to work with that given client, so we have to go with what's available to us. In this particular case, they also charge an additional 1% fee. But for many of you, looking at that 5.49 down here, that is rather hefty. Now, this is for standard, what we call conventional mortgage. On the other hand, if you're looking at something like a rental, you'd be looking closer to 5.79. And in this lender's case, they are quite high as well on the variables. Many people are opting to go variable, as they'll get a bit of a discount. Right now, this lender, we're looking at 3.7% as our Bank of Canada rate, with a 0.9 rate above that point. So you'd be looking at 4.6%, which is still better than the 5.49, but still not spectacular. Now, as many of you know, in recent years, I have switched over to working with another lender, which I find provides much more competitive numbers. So I'm just going to clear all my drawings there. And in this case, we're looking at Blueprint. Great lender, got great terms for my clients and whatever else. As you can see, the rates have increased. The Bank of Canada's rate increased to 3.7%, which is quite high there. But more importantly, when we look at the 5-year rates, these have gone up significantly. So if you're looking at high ratio, so you're buying perhaps your first home, you only got 5 to 10, 15% down, you would actually get a bit better rate at 4.19 in a 5-year fixed side. On the other hand, if you want to avoid the insurance premiums, then you could unfortunately get a little bit higher rate, but you wouldn't have to pay the premiums, looking at 4.39. Now, on the flip side, if many people are calling me up, as I have over the years, saying, "Dean, I need to consolidate my debts. I see, what can we do to bring down my monthly payments, hopefully pay less in interest?" In which case, we're looking at uninsured rates, as I have here on the right-hand side. And those rates are, again, significantly higher. And usually you do pay a bit of a premium to do a refi as opposed to a purchase of a home, or even just a straightforward renewal on a home. You'll pay a bit of a premium there. So right now, this particular lender is offering 4.74, which is still significantly better than what this lender is offering here in the 5.7 range. And again, depends on which lender you talk to. You look at like an RBC. I think I was getting some rates from them the other day just for a basic purchase in around 4.69. So by all means, give me a call. These rates do change on a consistent basis. One thing, a lot of my clients that are a little bit more open to trying to get better rates, but they're willing to go with the upswings and downswings in the market, is the variable rates. So as you look here, again, if you're going to be doing a purchase, you could get up to 0.9 off of the 3.7. So you'd be looking at actually a 2.8% rate, which is spectacular this day and age. That being said, keep in mind that you are most likely going to be paying higher premiums as time goes on. And that's one where I like to walk clients through, because the biggest issue when you're getting a variable is, what are my monthly obligations going to be? Can I afford the extra $50 or $100 a month that the lender is going to be asking from me? So by all means, give me a call. We can talk through that and a couple strategies as to how you can navigate the rising interest rates on your mortgage. And again, if you're looking on a refi, unfortunately, we're not going to get quite as good of a break there. But again, you can get 0.3 off of 3.7. So you're looking at 3.4%, which is still a lot better than paying 4.74, as I've indicated over here. So again, this is just some basic information. Every situation is unique. Give me a call, and it'd be my pleasure to walk you through this process. Now, flipping hats over to the real estate side, let's look at some basic trends there. First off, we do have our market stats, and this is going back for the month of May, as you can see. And the big one is that our and many of you might find this surprising, is that, oh wow, my house is worth more money. But keep in mind that when we put these stats together, we're usually comparing them to the year prior, same month, the year prior. So we're looking in this case, May 2021 and not May 2022, hence the 17% increase. But for those of you that perhaps track the real estate market a little more closely, you'll realize that this average is actually down from where things were more recently. And I'm going to show you a different stat that we look at on a weekly basis, myself and some of my colleagues, so we can kind of track this market, which is moving at a rather aggressive pace that we don't typically see. And there's a lot of reasons for it. One of the big ones, in my opinion, of course, is the mortgage rates. A lot of people are saying, listen, my monthly obligation is going to be higher. I'm not comfortable taking on a mortgage as high as I was. Hence, this is as high as I'm willing to buy. The other one, of course, is stress test. With these higher fixed rates, they're having to qualify at a higher number, and therefore they don't have the option to even borrow that much money, which of course then plays down into the real estate market and how many people are willing to bid above the list price. So anyways, here's some basic stats, and I'll definitely post all the stuff in my newsletter down below. But check that over. If you have any questions, reach out to me. But on the flip side, if we look over here, we do track this on a weekly basis. Again, clearing out my stuff there to see what's been going on. And as you can see, back in February, our average price, this is for all home types, so this is not just detached homes, this is for everything, condos, townhouses, semi-attached, whatever else. We were up and around the $1,032,000 mark. And as you can see, very significant price increases over that time. The big one, of course, being right near the beginning of January. Okay, and one thing we track in line with the increase in sale prices is how many of these listings are coming on the market and not producing the results the sellers were looking for. So not necessarily are they selling above list or not selling above list, because often we do underprice houses and we are well aware of that. But the question is, what's transpiring in the market? Are they selling above their list price and in numbers that the sellers are looking for? And as you can see, as the year progressed here, we had a very low, what we call sale to cancel ratio. So roughly speaking, let's say it's about 10%. So that means for every 10 listings that were sold, maybe one listing may not have sold as expected. However, as we pull into the more recent months, especially in the last 7 days, you will notice here that, well, first of all, you'll see a downward trend. Our sale prices are dropping from our overall average. And unfortunately, our sale to cancel ratio has been increasing quite significantly, to the point that this last week or so, we actually saw 100% sale to cancel ratio. That means for every house that's sold, one house canceled. Okay, it doesn't mean that they didn't get any offers. It just means that the offers that came in were not necessarily to the liking of the seller. And this is especially relevant when you consider that many sellers are underpricing the homes just to pull in the offers to hopefully get above list. So they possibly did well, just not as well as they had hoped for. Now, if we look here, you'll what I find I like a lot is my graph. This graph does a great job kind of showing you where the market has gone over the last year. So as you can see, we had a rather large spike right at the very beginning of the year. And then more recently, yep, there it is right there. And then more recently, we've seen this downward trend, which has not been great. Perhaps stabilizing a little bit now. We'll have to wait and see. It's a little bit premature. As 1 week to the next, it depends on what sold that week. Do we sell a lot of $1 million homes, a lot of condos? That can definitely sway the averages. But of course, with a city as big as Kitchener-Waterloo, it does help if we have all that information there. And for those of you that are curious, we do go into a lot more detail than just that. So going down here, we have our townhouse trends and what's been transpiring there. And as you can see, similar sell to cancel ratios. And then we got the condos further down as well, seeing that significant rise. In this case, we've just broken down to a weekly, as we find the monthly, or so the weekly for the all sales types works well for us. Another thing I do track actually is let me see if I got it here. How many listings are selling above the list price? Okay, so again, with my colleagues, I track this on a pretty regular basis. In order for this to have relevance for those of you that do not buy and sell homes on a regular basis, I've actually pulled up one from back in the beginning of April and another one that I have from this last week. And the big thing I want to kind of highlight to you here is sorry, just drawing this, is the number of homes selling above 300,000. Okay, look at that. Back in the beginning of April, we had 19, which is actually a bit of a drop from where we were earlier. But either way, the point here is that the last week or so, we only saw one home sell above 300,000 above list price. Now, is that an indication we're not underpricing the homes as much? I don't think so. It's a case that the buyers just aren't willing to go. So as you can see, these are very interesting times. A lot is changing up here. Again, as I mentioned earlier, every situation is unique. So the best thing is to give me a call or shoot me an email and let me look into your particular property, your particular mortgage situation, and let's do some side-by-side comparisons. Because in general, averages can be a little off depending on which homes were utilized from one week to the next. But as we can see, we are seeing a bit of a correction here. I do suspect that that will start to slow down a little bit as many of these sellers are now being a little more cautious in purchasing homes without the condition of the sale of their home. So right now we've had a few sellers that have had to sell their houses, hence the buyers haven't been able to get some good opportunities here to buy into the home where the seller really is in a position where they had to offload the house. But I suspect we're going to see a lot less of that. And I suspect that as we get into the summer months, we're going to see more of a flattening of the market. I do not expect a rebound, especially with the rising mortgage rates and everything that's happening there, not at least in the near term. But for the short term, we should see probably more or less a flattening of the market, which may carry on for some time, depending on where the mortgage rates go. Okay, so I hope that all that information is helpful, and I hope that perhaps my insight will give you some much needed insight as you talk to your friends and family. And by all means, feel free to have them reach out to me directly. And like I mentioned earlier, things are changing on a pretty rapid basis. So keep in mind, this is as of today, this information, and by all means, we should continue to have dialogue and discuss things as everything progresses. Wishing you guys a fantastic summer, and by all means, reach out to me. Shoot me a text, shoot me an email, give me a call. I'd love to hear from all my past clients. Have an awesome summer. Bye.